If I would have told you that we're going to get a very, very hot CPI and a hot PPI, and I would tell you last week, what do you think the market would do? You would probably tell me the market would go down 2 to 3% at least. Where we're going to summarize the week and see, did the market behave as you expected? Because we got a hot CPI print, we got a hot PPI print. We're going to talk about all the news, everything that happened this week. Are you ready for it? Then let's go. Hello, and welcome. Now you can see me. Hello, and welcome back to the channel. I have no idea what just happened. I'm Micha Stocks, and on this channel we talk about everything or most of the highlights of the news that happened this week. We summarize the fundamental data, the macro data, and everything that we need to do. And a quick reminder, everything and anything that you see here is only for education and entertainment purpose. This is not financial advice. Everything is happening on our channel, which is right now 2.89 subscribers. We have 65 videos, and if you're new, you can subscribe to the channel and push notifications to on, and then you'll get notified every week where a weekly summary is being posted. Dow Jones ended the week almost on the zero. S&P down 0.13, Nasdaq down more than 1%, 1.17, and the Russell had a very bad week, especially after the PPI down 2.1%. The indices, look how they behaved. And when we are in fear that hot CPI means the rates are not going to come down, we're going to the 2022 playbook. Energy up, technology, real estate down. And that's exactly what happened this week. The best week for energy since the beginning of the week. And afterwards, material. 2022 playbook, one by one. This is the crypto market. Bitcoin giving everyone a chance to hop on the train, down 5%. Ethereum is down 8.95%. When we look at the Magnificent Seven, or maybe we should take out Tesla with a very, 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 very bad opening to the year, down another 6.7% this week. Meta down 4.3%, but Google up 4.2% after they had their investors capitulate, I believe, after a 15% drawdown. Microsoft 2.5, Apple 1.1, and Nvidia on the green, plus only 0.35. I don't know if Nvidia's investors are used to such low numbers. This is the heat map, and you can see there are islands of green, very much green, like Google, Microsoft, Apple, Oracle, very good earnings. On the flip side, we see companies on the red. We talked about some of them. But you can see them now on this chart. And that brings us to the indices themselves. You can see that we are a bit calmer than we were in the weeks prior. There are several of the ETFs of the indices that are currently on neutral trading range. They're not in a great timing position to go in, but they're at least not overbought. Some are still overbought, like the mid-caps. Mid-caps are currently overbought. The S&P 500 currently overbought. But there are areas of the market which are not so overbought. Again, I don't think it's a great time to start building your position. And again, I'm not a financial advisor. I'm just looking at this data. But it seems like we're on a path to calm down the overbought conditions. And that takes us directly to the CPI print. On Tuesday morning, 8:30 Eastern, we got the CPI print, which came hotter than expected. There is a tendency for February to be high, especially when January is high, because there is a ripple effect between January and February, and indeed, it came hotter than expected, 0.4. The market, while hearing that, did not sell off so dramatic. Actually, it held itself pretty well. But then came the PPI, hotter than expected as well. And here the market started selling off a bit. When you dive into the different breakdowns inside the PPI, you can see that some of the most impactful category was actually insurance costs. Why am I mentioning that? Not because it's not inflationary, it is. But when you ask yourself if the Fed increases rate, let's take inflation is hot. The only tool we know right now is to raise our rates. If the Fed raises rates, does that takes insurance down? I don't know. Maybe people will not buy cars. Maybe. But that doesn't reduce the price of insurance. All it does is reduces insurance as a whole, because insurance costs would stay the same. So the Fed right now is stuck in a situation where they need to decide if they keep their mandate of raising rates in order to prevent inflation, or they're diving in. We'll hear from them this week during the FOMC. We also had earnings this week. We heard from Oracle, a very upbeat earnings report. On the other side, we heard from Adobe on Thursday, and they, like others, reduced their forecast, saying we're not sure what is going to happen in the next few months, just like SentinelOne did, just like Zim did, and other companies during the week. So we didn't have an amazing earnings week, and we're actually at the tail end of earnings. That brings us to the company that keeps getting bad news after bad news after bad news, and again, this is Boeing. United Airlines 737. Boeing had an emergency landing in Oregon after losing a panel in midair. Boeing just can't find any good news at this time. Anne-Marie Horton from Bloomberg updates us that the Chinese government has quietly asked the EV makers like BYD and Geely to stop using American chips, to use only Chinese-made chips. They don't want Americans to surveillance them. They don't want the American technology to be installed, and the separation seems inevitable. McDonald's suffered a global tech outage during the week, and it's very interesting because the report came out only on March 15th, which is a Friday, but during trading on Thursday, if I'm not mistaken, McDonald's stock went down in a dramatic way, and it wasn't clear why. Or someone knew about it up in advance and didn't report it, or someone knew about it and didn't report it. Now that brings us to Apple. Apple acquires an AI startup called Darwin AI that adds more and more AI capabilities to Apple's stack. All that in front of WWDC, which is supposed to happen July, if I'm not mistaken, this year. Intel, Google, and Qualcomm are founding a new XL Foundation in order to fight NVIDIA's dominance. Will they be able to do that? In technology, it's always a question of timing. If they create that foundation now, it will take them at least 6 to 12. Let's say it was created tomorrow morning. 6 to 12 months until something will be produced. In that time, what did they think? NVIDIA would do nothing, would lay on their back and not do anything. And if we're talking about NVIDIA has a huge AI conference starting tomorrow. I'm going to be there in person to take videos, to bring you all the news. I'll probably summarize that on our weekly summary next week, so stay tuned for that. And Microsoft using OpenAI capabilities and more features with Copilot. And now they're going to add artificial intelligence to Copilot for security as part of their stack. The vision is pretty clear. They have hundreds of millions of Office Suite customers. If they're able to add $30 to 10%, 20%, doesn't matter the percentage, that's a net gain for them, and they're going to push as strong as they can to get that fulfilled. MicroStrategy and Michael Saylor keep buying more and more Bitcoin. This time they raised, it's not 500, they actually raised more. They raised $525 million in convertible notes with interest under 1%. So basically the math is the following. They raise for less than 1%. They buy Bitcoin. Bitcoin rises for more than 1%. And in theory, which they won't do, they can sell the Bitcoin and just do the arbitrage. They're not going to do that. They're a proxy, or they're building themselves as the biggest, let's call it, institution for Bitcoin. They hold over 200,000 Bitcoins right now, and they keep doing that. Currently, they became the leveraged play on crypto and on Bitcoin. And if we're talking about cars, EVs, we have Fisker. Fisker is looking for a potential bankruptcy. No one's buying their cars. Expenses are too high. This is going to be the second time Fisker is going bankrupt for the same problem of trying to produce EVs. It's like no one learns from the first time. And still in EVs, production resumed in Giga Berlin. If you remember last week, I reported that Giga Berlin was shut down due to arson. That was fixed after 10 or 14 days of not producing any vehicle. Eli Lilly with their Lilly Direct, their prescription drugs for the weight loss Zepbound is now using Amazon to fulfill all their orders, which means that Lilly direct customers are getting better service. Amazon is probably getting their fair share from the delivery. Everyone is happy. Customers, Eli Lilly, and Amazon, win, win, win for everyone. And what you see on this chart, and I wanted to pull it up earlier, but I did it now, is the inflows, the money inflow to the Bitcoin ETFs. They were launched here, January 12th, and you can see the cumulative money going into, of course, this is BlackRock's, and the money going out of GBTC because of their high commission or high cost for the ETF. But what you also can see is that net, we are net positive for money going into ETFs. Why is that relevant? Because when you see money inflow going into a fund being positive and not negative, meaning that more money is buying something that is capped in 21 million, it means that you are expected to see prices rising, and that's what the Bitcoin maximalists keep waiting to see, the price going up, up, and up, and all this before around April 20th, when we'll see the halving, which means that the reward that the Bitcoin miners are going to get are going to be cut by half. That will also create a boost. History says that once halving happens, in the next year, 12 months, Bitcoin is up between 300% and more than 1,000%. Now, I'm not going to go that far and saying it's going to happen thousands percent, but all I'm saying is that if the inflows keep coming in on a daily basis, the numbers are very big, and the miners currently are not able to mine so many Bitcoins. Bullish for Bitcoin. That's all the news that I have for this week. Are you ready for next week? Let's start with the least important things, which is the earnings. Nothing interesting on Monday, nothing interesting, at least from my perspective. Sorry, you might own some of these stocks and they might be interesting for you. Nothing interesting from my perspective on Tuesday. Wednesday, we do see General Mills. We will hear from Micron, Chewy, and KB Homes. On Thursday, we will hear from Accenture, we will hear from Sundial, and we will hear from Nike, Lululemon, and FedEx. All these happen during the week. But the main event next week, or the main two events, one I already mentioned, is the NVIDIA conference. The second happens on Wednesday, March 20th, where we're getting the FOMC economic projections. Yes, the Fed members are convened Tuesday and Wednesday in order to decide what is the rate path. And on 2 p.m. on Wednesday, Eastern, we're going to hear their decision. And of course, 30 minutes later, we're going to hear from Jerome Powell on a press conference. What exactly is the plan? Are they planning to raise rates, to lower rates, to talk about lowering rates, to talk about raising rates? How are they going to deal with inflation, and more and more? And that, of course, brings us to the chart of the S&P 500. What you see here on light blue is the 20-day moving average. What you see in green is the 50-day moving average. As you can see, since November of last year, S&P 500 did not touch even once the 50-day moving average, which means that we're still very far from it, even today. During the last few days, or actually the last 2 weeks, we saw red weeks, which means we were back-to-back negative weeks on the S&P 500. But on a daily basis, we're still above the 20-day moving average. From a technical perspective, this means that the uptrend is still intact. We haven't broken it since November. We might break it as we did here, but a day later, we're already above it, so it's not a true break. It's more of a, let's call it a support test or something like that. This is something that everyone would look at. Are we going to get very dovish comments from Powell, and then we might see S&P going to 5250 or even 5300, or we're going to get very problematic, I would say, or rate-related comments from Powell, and we will finally see a break of the 20-day moving average toward the 50-day moving average. If that happens, of course, we will talk about it on our next weekly summary, and then we're going to see what would be the next steps. What should you think about in stabilizing your portfolio? Because if we start going down, some, if not all of your stocks might be on the red side. I hope you enjoyed everything you saw. You can smash that like button if you haven't done it so far. If you can subscribe, that would also be amazing. Thank you very much. Next week, new news, and of course, all my impressions from NVIDIA AI conference. Thank you very much. Bye-bye.